Today, crypto prices bounced to start the week as investors bet President Trump will soften his stance on tariffs. The U.S. Treasury lifts sanctions on crypto mixer Tornado Cash. And Circle's global policy head weighs in on recent regulatory advancements for stablecoins in the U.S. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Crypto prices and the broader market on the rise to kick off the week, with investors hopeful President Trump may hold back on some of his wide-ranging tariff plans following his recent comments on the topic. As of noon Eastern, Bitcoin rose more than 3.5% to the $88,000 level. XRP climbed 2.5%, and Solana's SOL token soared more than 8% to $143. Okay, let's talk about the top stories. The SEC held its first crypto roundtable on Friday, focusing on defining the security status of digital assets. The general counsel for Andreessen Horowitz's crypto arm and former SEC Commissioner Troy Paredes were among those involved, according to Reuters. In remarks at the gathering, acting chairman Mark Uyeda said a different approach, other than enforcement actions, should have been considered for classifying crypto assets under federal securities laws. At the meeting, SEC Commissioner and Crypto Task Force leader Hester Peirce noted the agency is actively working with the crypto industry to better apply securities laws to the sector and find a workable framework. That's according to CoinDesk, which added that attorneys representing different parts of the industry weighed in during the panel discussion. Next, crypto super PACs are pumping cash into Florida as Republicans face the risk of a decreased House majority. Affiliates of Fairshake are trying to boost Republican candidates in two Florida races, which could determine whether Republicans hold their thin majority in the U.S. House. The vacancies emerged after sitting Republican members left to join the Trump administration. Those include Michael Waltz, who stepped down to become Trump's national security advisor, and former Congressman Matt Gaetz, who withdrew his nomination for Attorney General due to a number of legal controversies. Fairshake is backing State Senator Randy Fine with $1.16 million in ad spending and investing another $345,000 to support Jimmy Patronis, Florida's chief financial officer. Both have expressed support for digital assets. The districts have historically leaned red, but Democrats see an opportunity to compete due to the market and economic volatility that have headlined President Trump's first 2 months in office. Early voting in Florida kicked off over the weekend. Finally, the U.S. Treasury Department has lifted sanctions on crypto mixer Tornado Cash. Friday's decision follows a long legal battle where users of Tornado Cash challenged the sanctions in a case backed by Coinbase. In November, we told you that a federal appeals court ruled the Treasury's Office of Foreign Assets Control overstepped its authority by sanctioning Tornado Cash, arguing that the mixer's immutable smart contracts are not property and therefore cannot be blocked. In a post on X yesterday, Coinbase's chief legal officer criticized the Treasury for taking action without a final court judgment, noting that the department gave no assurance that it will not relist Tornado Cash again. In 2022, the Treasury Department under the Biden administration first sanctioned the mixer, accusing it of being used to launder more than $7 billion worth of digital currency by North Korean hackers and other bad actors. All right, turning back to crypto regulation for our main story, I spoke with Circle's Chief Strategy Officer and Head of Global Policy about recent regulatory advancements in the space. Dante Disparte weighs in on the Senate Banking Committee recently advancing a stablecoin regulation bill and overall crypto sentiment on Capitol Hill. It's been a few days now since the Genius Act passed, and we went through that markup. Before I say anything more about it, what are your thoughts presently about the current state of that bill?
Well, I think the Genius Act is an important piece of legislation. It goes the furthest of any stablecoin bill we have yet both debated and have had go through a markup process here in the United States. And it reconciles a couple of key equities that hadn't been balanced in the past. The first is the role of states' rights, and so enabling continuous state oversight of payments and banking innovation. The second is that it allows for banks and non-bank actors to compete in stablecoin issuance on a level playing field. And then the third is that it also provides a pathway at $10 billion and up for U.S. regulated stablecoin issuers to have a federal framework. We've always advocated for that because at scale, stablecoins are fundamentally export products from the United States. And so we think this bill goes the furthest of any yet to get all of those equities right.
I know that there is a lot of momentum, and the industry right now is kind of struggling to hold on to that post-inauguration euphoria, but a lot of excitement about all of the things that we are going to get done this year. I kind of wonder if you could break down, well, you've said what you like about the bill. Is there anything about it that leaves you wanting more? Or are we still kind of in this place where, anything that we can get passed on the legislation front is progress and is positive for the industry?
Right. Well, I think if you look at the markup itself and the markup process that we saw in the hearing, many of the Democrats, for example, even Senator Warren rather, sounded like they were more in the maybe camp as opposed to in stark opposition to the stablecoin legislation, the Genius Act. And that tells you a little bit about the fact that up until now, it's been a very bipartisan sort of dialogue. And some of the areas where many Democrats, for example, are looking for improvements in the Genius Act is the degree to which the Genius Act incentivizes the development and the creation, frankly, the onshoring of international stablecoin issuers who reference the US dollar. I think that's an important set of questions that need to be addressed. The second question is, to what degree does that type of internationalization question support the deposit base of the US banking system? And so up until now, a company like ours, for example, has built deep partnerships with US banks. And so as Circle and USDC grow, the US deposit base grows. And that's a critical piece of the puzzle to strengthen the nation's banks. And so if we continue allowing under this bill either pathways for the reference of US dollars overseas, and we don't have a model that incentivizes that onshoring, that could be potentially very bad for banks. The other piece that's important in that category is companies like ours and all of the US operators need a level playing field globally. So the European model has asked Circle to establish a European affiliate. Even the dollars corresponding with USDC are in European banks. And so we need a reciprocal regime at the global level that allows us to passport into other jurisdictions.
Now, there is a competing bill that's been proposed in the Stable Act. How closely are you looking at that? Do you have a preference between the two? How are you comparing the two right now?
Well, I think the fact that, it was a very fascinating week, obviously, in U.S. stablecoin policy. We had not only the markup of the Genius Act in the Senate, but we had a really extraordinary hearing led by Chairman French Hill in the House Financial Services Committee. And on the stage, you had the largest cash custodian in the world, BNY Mellon. You had the CEO of Stripe on the stage, and you had a panel of witnesses that were really debating this question of stable coins in the advancement of the U.S. payment system and banking system and broad role of the U.S. dollar. The House Financial Services Committee historically has been the center of negotiating gravity for stablecoin bills. We euphemistically refer to Patrick McHenry and Maxine Waters' legislative developments as the McWaters bill. And so you could see a lot of continuation of that important work under Chairman French Hill. There are many aspects of the Stable Act that, for example, explicitly call out the objective for the Treasury Department to seek regulatory reciprocity overseas. That's something that we think the Genius Act could borrow from, at least at a technical level, to ensure that digital dollars really are a supranational innovation. They should be exported from the United States, subject to a U.S. sort of common standard, and then made available around the world in the same way that the US dollar in analog or traditional form is available everywhere. That should be a stated objective in any final bill that makes it to the president's desk.
I think a lot about competition in the stablecoin space. USDC and USDT obviously dominating the market for dollar-backed stablecoins. At the end of last year, it seems like everybody was coming out and saying, hey, we want to get into the stablecoin game, where we are going to for sure. And banks are increasingly a part of that conversation as well. So I do want to ask you about the competition with banks, but going back to the Genius bill, what would that legislation, what kind of impact would that have on the banks in the U.S.?
Sure. I mean, I think for one, many banks have up until now, even the ones that were very interested in banking digital assets and crypto, were given really cryptic guidance, no pun intended, from their primary regulators. Just yesterday, for example, the Office of the Comptroller of the Currency has rescinded guidance on banks having to have reputational risk be a category of underwriting that the banks do with their customers, or even under the bank's own supervision. The OCC also, following the president's crypto summit, immediately rescinded guidance as well around stigmatizing banks touching the technology and competing and offering core services to this sector. But the idea that that banks and non-banks are in some sort of death match between stablecoin issuance activity and core banking activity, I think I would actually advocate that this is an all ships rising business model and proposition, and that the more we could localize and onshore this activity, the better it is for the banks, and the more you will effectively see categories of digital dollars that all have similar legal, regulatory, and economic frameworks, and therefore the real long-term breakthrough is complete fungibility and interoperability of these innovations in the payment system. The biggest winner here should be the U.S. consumer, the U.S. dollar, and broadly the U.S. economy. And I think basically the banks have been in this sort of strange co-opetition state up until now, but they could be really big beneficiaries if we get this model right.
Disparte also weighed in on the potential timeline for the implementation of crypto legislation in the U.S. You can check out his full interview over at cnbc.com/cryptoworld. That's all for today. We'll be back again tomorrow, and we'll see you then.